Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Wow, what a Friday. The rich got richer today, my friends. U.S. stocks making new all-time highs. Apple, Amazon, Costco, Google, Facebook, Microsoft, Walmart, and Oracle. All three major indexes closed in the green today. The S&P 500 and NASDAQ jumped to fresh records as jobs report fueled bets for a September rate cut. Gold added 30.40, 1.28% to finish at 23.9980. So let's add it all up. U.S. adds only 206,000 jobs as unemployment rate rises. The jobs report sent a clear message to the Fed. The labor market is quickly cooling off. The Fed is under pressure to act or risk falling behind. U.S. bond yields fell as job data fuels bets on two 2024 rate cuts. Stocks up as jobs fuel get on with it Fed calls. Okay, so the heat is on for the Fed to act. Now all of a sudden we're looking for two rate cuts this year, and the market wants them now, not in September. Hey, I'm sorry to bring up politics, but the outcome of this election will affect the economy and all of us as traders. The calls for Joe Biden to step down are getting louder and remain persistent. CNN, as Biden digs in, some top Democrats want him out of the race this week. The dump Biden movement grows. Public pressure mounts for U.S. president to quit race. And then, from the New York Times, Biden tells allies he knows he has only days to salvage candidacy. I say give Kamala a chance. She can run the United States. But then this report surfaced. Biden's bad week just got worse after he said he was the first black woman to serve with a black president. I want my subscribers to be aware we are 74 days from the second day of the September Fed meeting. That's when everyone was convinced we were going to get a rate cut, right? But after this past Friday's employment numbers, the heat is on for two cuts this year instead of one, and they want one sooner than September, I would imagine. We are also 122 days from the election date of November 5th. I feel these are the most important dates on the calendar so far, and we need to watch closely as we approach both of these milestones. At the time of this recording, I think we'll see AMC's second quarter earnings somewhere between August 8th and August 13th. That's for CSI. The other potential catalyst for AMC I can't put on a calendar are surprise announcements from Ryan Cohen about his future plans for GME. We could also get the results of our recent meetings and negotiations with our debt holders. That could surface at any moment. We could see loan modifications. We could see more swapping stock for debt at near record low prices, a favored technique of Adam Aron. He doesn't care at this point. He's made over $100 million. The pandemic was the best thing to ever happen to this man. But we could see loan maturities pushed out past 2026, so stay tuned. Now, if it's good news, Adam will try to release it when it'll have the least impact on the stock price. Wall Street runs our firm top to bottom, so senior management will do nothing deliberate to hurt the interests of Wall Street. Not at this time, I assure you. But if it can be interpreted as negative news, Adam will seek to use it to offset good news or kill or contain a stock rally. I believe there's a 30% chance of a Swan event before September 18th and a 50% chance of one before the election date of November 5th. Okay, I know you guys are growing impatient, waiting for me to pull a swan out of my ass, but try to remember, these are the most difficult events to predict. That's why they're called swans. The reason I prepare these calendars is so we know what's going on the days a swan might land. You could get this data anywhere, right? But event-based analysis is pretty simple. I'm looking for a swan event to land on a day where the hedgies and the markets are already digesting surprise economic data. I'm trying to catch the hedgies long in a sell-off, short in a surprise rally. I already know when you're leveraged 60 to 1 or even higher, it only takes one or two things going wrong at the same time. Think Archegos Credit Suisse, and that creates a crisis in your leverage chain of investments. And then shit starts to get real. The fun part is all the dirty techniques and tricks we've all become accustomed to. Spoofing, hit pieces, halts, dark pool shenanigans, naked shorting. None of that shit works when you get a margin call. You can't spoof your way out of a margin call. You either come up with cash or your prime broker will start rearranging your portfolio for you. If we've learned anything, we know we can't possibly beat Wall Street if they're working together against us and the regulators are ignoring all their activities. What's worse is if senior management is also assisting Wall Street, like with Adam Aron. There's little chance any good news or fundamental improvements are going to convince our enemies to start covering. The Swan I lived through in 2008 caused 700 hedge funds to close in just 3 quarters. That's the only way out of this mess, in my opinion, and that's what I'm looking for. This is not financial advice. I'm not a financial advisor. This is just my opinion, and I will never tell you to buy, sell, or hold any security or cryptocurrency. Now, Monday, July 8th, we'll start with consumer credit, but that doesn't come out till 3 p.m., so it won't have any effect. Tuesday, July 9th, 10 a.m. Eastern Time, Fed Chair Powell will testify before the Senate. Wednesday, July 10th, 10 a.m., wholesale inventories, and Chair Powell will testify in front of the House. Now, 4:15 on Wednesday, we've got a CAT event. Industry testing checkpoint call, and industry member report card webinar. Now, here's where it gets hot. Thursday, July 11th, 8:30 a.m., initial jobless claims and consumer price index. That's big. Friday, July 12th, again, 8:30 a.m., producer price index. Here's the problem. If either CPI or PPI come in hot, they can't pressure the Fed to cut rates at the July Fed meeting at the end of this month, right? Also, on that day, JP Morgan Chase, Wells Fargo, and Citi will release their earnings. Friday is going to be hot. Monday, July 15th, again, 12 p.m., Fed Chair Powell is scheduled to speak. That's also the 1-year anniversary of Judge Torres's decision with the SEC versus Ripple XRP. We're also going to get Goldman Sachs and BlackRock earnings. That's a big Monday. Tuesday, July 16th, 8:30 a.m., U.S. retail sales. Thursday, 8:30 a.m., initial jobless claims. Anything about jobs after this recent jobs report we had on Friday is going to be closely scrutinized. Then we wrap this month with, on Monday and Tuesday, July 29th and 30th, that'll be the FOMC meeting, right? And then Wednesday, July 31st, that's a possible wrap date for the SEC versus Ripple case. Now, also, on July 26th, we've got Deadpool and Wolverine. I only mention it because it could be the biggest movie of the year. Investor Place 10 days ago. AMC stock siren song resists the call of this meme play in 2024. Investor Place 8 days ago. Investor warning why AMC is a meme stock to avoid at all costs. Investor Place 6 days ago. From pump to dump, 3 meme stocks headed for a massive crash. And Investor Place 4 days ago. Meme nightmare, AMC stocks looming bankruptcy risk signals 90% downside. And then 3 days ago, Investor Place. From meme darling to 99% crash. Is this AMC stock's final act? Okay, Investor Place. We get it. You don't like the stock. But is any of this real financial journalism, Or are you guys just determined to tank this company and its stock? It feels like someone is putting you up to this, but that's just my opinion. I've emailed Brian Hunt, CEO of Investor Place. We'll see if he responds. Recent tweet from Adam Aaron: we are always thinking about our shareholders. Hey, if you're a member of Investor Connect like I am, you have a free ICEE coming. We're paying Adam $500,000 a week right now. Our market cap has been obliterated. But pick up your free ICEE, guys. Hashtag today we pounce. Hashtag choke on that. Hashtag checkmate. Hashtag there's gold in them thar hills. Don't you miss the clever hashtags from Adam? Those were designed to manipulate you. A con man must first win your confidence. He must make you believe he's on your side. I ride with you. So I only have two things to say about Ripple XRP today. Number one, from Daily Coin, Ripple verdict takes shape as SEC makes their move. Ripple has deployed a recent court case as a defense strategy. The SEC has not relented, criticizing Ripple's arguments. Legal experts have observed frustration on both sides. That's all true. But you know what else is true? This case will not last forever. There will be an announcement one day that it's all over. July 15th marks the one-year anniversary of Judge Torres's landmark decision, and July 31st, many are expecting a verdict. And number two, breaking today, Elon Musk's AI hints at potential XRP adoption on X. Elon Musk's artificial intelligence, Grok, has initiated discussions by announcing the potential use of XRP and XLM as payment options on X, formerly known as Twitter. This was made public following a query by Amelie, a crypto influencer based in Dubai, to X's AI assistant Grok about the possible adoption of XRP or Stellar for payments on the X platform. So I'm ready. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But once this thing gets out from under the SEC's thumb, there are nothing but amazing catalysts ahead. Of course, the settlement news itself, a potential mass adoption phase by global banks, a possible shot at participating on Twitter on their new payment system, tokenized gold and silver coming to the ledger, a possible Ripple CBDC. Ripple is working with a dozen governments on CBDC projects. You got the IPO of Ripple itself and XRP ETFs. Hey, if you could find another coin with that much in the hopper, by all means, throw it in the chat for me. Okay, so let's do the UFI, the Uncle Frank Index. Archer skyrocketed pre-market Friday to 495. That's like 17% or so. Then at the open, out of nowhere, on nothing but positive news, the shorts had had enough of that shit and pounded the stock down to a low of 422. Archer would go on to finish at 440, up 19 cents or 4.51%, and that's over 25% for the week. Huge crime candle at the close, spiked all the way to 475 while the price was trading near 440. Just move that buying pressure into the ATS, not manipulation, not if the SEC or FINRA doesn't do anything about it. Pre-market, AMC posted a huge crime candle before the bell, spiking to 525. Afternoon, AMC was barcoded and spoofed right into the close at 505, up 2 cents or 0.4%, right where they needed it to close at max pain of 5, saving themselves millions in premium and stealing from retail investors in full view of regulators. While the rest of the market was rallying on good employment data, GameStop was thrusted down to 23.82, but did manage to push back over 25 to 25.08 briefly, but it was options expiration day. So the same people that sold you your options pushed the price of the stock down to 24.18, giving up 19 cents or 0.78% to finish the day at 24.18. Then they flipped on the algo, left for the weekend, and GME barcoded perfectly after hours. Okay, so let's run through the numbers. We'll start with Archer. Short interest, 54.45 million shares. Short interest ratio, 4.74 days to cover. Short interest as a percentage of float, 26.4%. Off exchange short volume, just over 5 million shares. Off exchange short volume ratio, 65.81%. Yeah, that's the dark pools. I've got a short squeeze score from Fintel of 76.99 on Archer. Borrow fee, I see 350,000 shares available at the time of this recording at a rate of 16.02%. Off exchange volume on Friday, only 21.39% of Archer's trades were performed on the exchange it's listed on. Max Payne at 4 for that July 12th maturity. Moving to AMC. Short interest, 52.94 million shares. Short interest ratio, 3.51 days to cover. Short interest as a percentage of the float, 14.43%, if you believe that bullshit. Off exchange short volume, just over 2 million shares. Off exchange short volume ratio, 35.54%. I've got a short squeeze score of 66.23 on AMC. Cost to borrow, only 1.59%. I see 1,100,000 shares available to lend and short at the time of this recording. Friday, off exchange volume, only 11.64% of AMC's trades were performed on the New York. I've got Max Payne at 5 for that July 12th maturity at the time of this recording. Finishing up with GameStop. Short interest, 44,729,000 shares. Short interest ratio, 2.92 days to cover. Short interest as a percentage of float, 14.28%. Off exchange short volume, 2.64 million shares. Off exchange short volume ratio, 42.2%. I've got a short squeeze score of 61.64 on GameStop. Now, at the time of this recording, I see a sickening 1.6 million shares of GME available to lend and short at a fee of only 0.56%. Off exchange activity on GME Friday, only 9.5% of all GME trades were executed on the New York. At the time of this recording, I've got Max Payne at 24 for that July 12th maturity. Of course, this can all change before the bell, so please double check. So, Uncle Frank, why do you do all this work if you think some or all of the data is flawed? Because I can still draw assumptions from the data. Which stock on this screen has the potential, the highest potential, for a short squeeze right now? I'll let you make that call. From Business Insider, Tesla short sellers bleed billions as Musk threatens obliteration for those betting against the stock. Yes, guys, we want something like this on a day when shorts are also dealing with unexpected results on economic releases. And then a nice fat swan flies in to seal the deal. That's what Uncle Frank's research is really all about. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.